You know, in the tech world, a few big names seem to get all the attention. But what if I told you one of the most important companies, one that's basically the backbone of our digital lives, is one that most people can't quite put their finger on? Well, today we're doing just that. We are pulling back the curtain on Broadcom. And if you want to understand just how massive this company is, you really only need to know one thing. Broadcom recently blew past a $1 trillion market cap. I mean, that puts them in one of the most exclusive clubs on the planet. It's a huge sign that their long-term strategy of aggressive growth is paying off big time. And that's the big question, isn't it? Because the story of Broadcom is not what you think. Seriously, it's this winding road of spin-offs, massive takeovers, and a huge strategic shift that's turned it into this unique powerhouse of both hardware and software. So let's start from the very beginning. To really get a handle on the Broadcom of today, we have to go back in time. And funny enough, the story doesn't even start with a company called Broadcom. Okay, so check out this timeline. It's pretty wild. The company we know today actually started way back in 1961 as just a little semiconductor division inside Hewlett-Packard. It got spun off, bought out, and in 2005, it became a company called AVGO Technologies. Now, 2016, that's when everything changed. AVGO, the smaller company, bought the original Broadcom Corporation for a whopping $37 billion, and then just took its more famous name. And from there, the deals just got bigger, leading up to the absolutely massive $69 billion acquisition of software giant VMware in 2023. So that's the history. But what on earth does this sprawling company actually do? Well, their slogan, "Connecting Everything," is honestly the perfect way to sum it up. At its heart, Broadcom really focuses on two main things. First, semiconductors. You know, the actual physical chips that make all our tech work. And second, infrastructure software. And you can think of that as the super complex operating system for an entire data center. It's the code that manages all the heavy-duty hardware for big corporations. And this is the perfect way to picture it. On one side, you've got the hardware. These are the essential building blocks. We're talking about the radio frequency chips in your phone, the special silicon that directs all the traffic on the internet. Then on the other side, you've got the software. This is the intelligence, the brains of the whole operation that manages all of that powerful hardware, stuff from VMware, CA Technologies, and Symantec. So how does having these two huge divisions, hardware and software, actually work as a financial strategy? Well, let's look at how they make money, because this is really the key to understanding Broadcom's power. Just take a look at this revenue split for fiscal year 2024. Now, before all those big software acquisitions, the semiconductor part would have been pretty much the entire chart. But today, infrastructure software makes up a massive 42% of the business. The VMware deal totally rebalanced the company and turned it into a true hybrid. And the strategic genius here is why they did this. See, the semiconductor business can be cyclical. It has its ups and downs tied to things like new phone launches. But that infrastructure software business, that's a different beast. It's usually sold as a subscription, which creates this incredibly steady, predictable, and very, very high margin stream of cash. It smooths everything out and makes the company's financials much more stable. Okay, so we've got the history and we've got the business model. Now let's distill this down into the really key things that every investor needs to understand about Broadcom. This is your cheat sheet. First thing you have to know is their legendary M&A playbook, perfected by CEO Hock Tan. It is a disciplined four-step machine. They don't just buy any company. They buy established leaders in markets you can't live without. Then comes the really tough part. They integrate surgically, getting rid of non-essential parts and focusing only on the top customers that bring in the most profit. This cranks up the cash flow, which they then use to, you guessed it, line up the next big deal. It's this repeatable cycle of growth that has literally built the company. Second, you absolutely have to understand their relationship with Apple. Broadcom supplies critical components for the iPhone. Now, this partnership is incredibly profitable and provides a huge, stable source of demand. But it also creates a major risk. They're very dependent on that one customer. If anything ever went wrong with that relationship, it would be a huge problem. So it's a powerful engine, for sure, but one that investors always have to keep a close eye on. And there are a few other crucial points here. In the world of cloud computing, Broadcom is the go-to partner for giants like Google and Meta to design custom, high-performance chips. Then you have the VMware deal, which really cemented their role as an essential partner for any big company trying to manage a complex cloud setup. And finally, through it all, they are just famous for being incredibly disciplined with their money and for generating enormous amounts of cash. So, all of this brings us to the future. With VMware now folded into the company, their focus is squarely on the single biggest trend in technology right now: artificial intelligence. And this quote from CEO Hock Tan really captures their whole strategy going forward. It's not just about selling one chip or one piece of software anymore. The goal is to get their biggest customers, the cloud giants and the Fortune 500s, to use their entire portfolio. The idea is to become so deeply integrated that they're completely indispensable. So when you think about AI chips, your mind probably jumps straight to Nvidia, right? And that's fair, but it's not the whole story. So the question is, how exactly does Broadcom fit into this AI revolution? Broadcom's AI strategy has two parts, and it's really brilliant. First, they dominate the networking that holds AI data centers together. Their Tomahawk and Jericho chips are basically the super high-speed highways that connect thousands and thousands of AI servers. You literally can't build a modern AI cluster without them. And second is their custom chip business. They work directly with giants like Google to co-develop specialized AI chips, like their famous tensor processing unit. They bring the hardcore engineering know-how to make these custom designs a reality. All right, let's bring this all home. We've gone through the history, the business model, the future strategy. Now, let's wrap it up with a clear summary and the key risks you need to be watching. So the main story is this. Broadcom is a tech titan that was methodically built through a very specific acquisition playbook. That process has turned it into this one-of-a-kind hybrid company that provides the absolute bedrock for our connected world. They're essential to data centers, the cloud, and now the AI boom. But of course, no investment is without risk. For Broadcom, there are really three big ones to keep on your radar. First, execution. That VMware deal was enormous, and actually making it work and unlocking all that value is a huge challenge. Second, like we talked about, is that customer concentration with Apple. That's a constant risk. And finally, regulatory scrutiny. When you're this big and you buy this many companies, you can bet that regulators all over the world are watching your every move. Broadcom is a complex, absolutely fascinating company that sits right at the center of the entire global tech ecosystem. And understanding its unique history and hybrid strategy is really the first step for any investor looking at this space. Learn, invest, repeat. Investing made understandable.